Let's go now to Chicago and check in with Scott Bauer of Prosper Trading Academy.
Let's go down to the Seaboard. I want to bring in Scott Bauer. He's the CEO of Prosper Trading Academy. Scott, let's talk some Amazon.
Scott Bauer.
Scott Bauer.
Scott Bauer. Scott Bauer.
Scott, let's pick this up because there are some concerns out there from professional investors and market watchers. In particular, you've got this global chip shortage, and then you've also got a global supply glut. And a lot of that is COVID related. A lot of that is just the fact that many other countries are just not in a strong position like the U.S. is, at least right now, when it comes to vaccination. So if you were to worry about something, I'm assuming it's not the Fed. If you were to worry about something out there right now, what would it be?
Yeah, I think you made a real good point, especially with the chip shortages out there, things taking longer, much longer than we had anticipated with all of the supply chain issues. So I think that's really the biggest thing to concern ourselves right now. The Fed is going to stay accommodative. But as Teddy said here, I believe we're going to see chop. I believe we're going to see sideways trade. I also believe we're going to be higher at the end of the month and at the end of the year. That being said, Cheryl, when you can buy insurance at a discount, whether it is insurance for the market, insurance for your car, insurance for your homeowners, insurance, you do it. And insurance right now is on sale. You can buy VIX calls. You can buy S&P puts. You can buy, anywhere you want to buy insurance, it's really cheap. So my advice is stay long in the market. Again, as Teddy said, we're probably going to see sector rotation. Stay long in the market, but buy that insurance. Now, one area I would be a little bit cautious about, I think the NASDAQ has run too far. I would not be surprised if we see a pullback in the NASDAQ, but I would buy that if we get it. One area that I love right here that I want to get long and stay long is the energy space. It has been beaten up. And if you look at the XLE, which is the S&P ETF for the energy space, where the top holdings actually are Exxon and Chevron. They make up about 45% of this. It is down right at its 200-day moving average. I think great opportunity to get in there.
Welcome back to Market on Close. The biggest move of the day is Bitcoin. If you checked last night, it was up 5% from Friday. Then at one point today, down more than 10%. Scott Bauer is back with us, CEO of Prosper Trading Academy. So Scott, in terms of how you're seeing like the connectivity between Bitcoin, the news flow, the rest of the market, what do you make sense in the way of explaining this today?
None, actually. And there's a lot of news flow out there, right? So number one, you obviously had the El Salvador whole big news event, which, you know what? I think at the end of the day, Oliver, it's really a nothing burger, to be quite honest with you, especially during the day when news came out that during the dip, what the president of El Salvador said they came out and they bought another 150 Bitcoins. Who cares, right? Who cares? I will tell you, though, the rollout didn't go as smoothly as they had hoped for. Their state government-run app was not working efficiently. Google and Apple did not pick it up, and most businesses there are not really set up to accept it. McDonald's is right now, okay, but most businesses are not set up to accept it there. So, is that the cause of the big sell-off? No. However, in hindsight, and I want to tell all the viewers here, in hindsight, this is probably the perfect case of the buy the rumors, sell the news. We got over the weekend that, all the Wall Street bettors or whomever it was, the hodlers are all buying, $30 worth of Bitcoin or whatever it was. You see news like that and it makes you a little suspect. Plus, we got that big run up that you and I had talked about last week, right to that 52.5, 53 number. And I think he had a lot of profit taking. So, what do I make of all of this? I don't make a lot out of the El Salvador thing. There might be something here with the dollar because it was funny because just early this morning I was talking to Ben Lichtenstein and we were talking about how the dollar has been so weak recently. And then we get, this rise up today. It's up 50, 60 bips, whatever it is. So, maybe that's causing a little weakness. But I think overall what we're seeing is just some profit taking here.
Scott, the buy the rumors, sell the news for Bitcoin as one of the charts here over the Bitcoin's existence that have just kind of been so well to technical understanding and price patterns. Very reliable way to think about Bitcoin is just to kind of extract all the noise and think about it as a technical thing because it's a very speculative asset. I think speculative assets obey some of those technical crowding, mentality type of trading levels very well. I've got this kind of crackpot theory, which is that basically every time Bitcoin makes a new milestone for market structure or acceptance, there seems to be major profit taking, whether it was a listing of futures in 2017 that basically perfectly marked the top, or that the Coinbase listing in the public market marked the top this time around as well. I wonder if there's something there. I mean, if Bitcoin is about selling to the next person for a higher price than you bought it, doesn't it make sense for this thing to drop every time there's like big waves of new people buying it?
Well, it's certainly not a crackpot theory. And in fact, when you just throw the data that you want out there, absolutely. When you throw all the data out there that you want, that makes just as much sense as anything else. I mean, historically, you're spot on with that. So if you do look, though, at the technicals, and it's still very hard to look at the technicals, but if you do, it met major resistance. The 52.5 area was major resistance. Yep. And it actually, on the flash that, 5 hours ago, 4 hours ago, when it really dumped, it did go through some support at the 46 level, but now it's hovering back in there. It's coiling back around that number here. So if this number does continue to hold 46 to 47 area, you know what? This probably will be a buying opportunity for Bitcoin down the road. What's down the road? A day, a week, a month? Who really knows? But we always talk about, Oliver, and we talked about it last week too, the coiling, where volatility gets
You mentioned
really
52
low.
as a resistance point, so that worked pretty perfectly there.
It did. And whenever we see Bitcoin just kind of, meander back and forth, it sets itself up for a pretty violent move. This violent move was to the downside after a pretty grinded higher weekend, Labor Day weekend, which in the past, quite frankly, Labor Day weekend has been pretty negative for Bitcoin. This one was different. Maybe we're just a day later in the sell-off.
Hey, Scott, so with that said, as you identified that 52 as resistance point, you were looking for passage through that then to ride the wave higher. Does that mean you're just kind of waiting for clarity here? Are there levels, do you still want to wait for it to get to 52 to get long? Is there a level here where if it breaks down further, you think about getting short, or is that bias still looking at for a dip to buy?
No, the bias actually, to me, is better to the upside now. The fact that it's coiling in here at this support, and again, it broke through support on the the massive flash crash, if you want to call it whatever it is that we saw a few hours ago. But the fact that it's coiling up here at a technical area that used to be resistance now became support, that to me gives it a little bit more, affirmation to the upside here.
All right, did find some buyers around 45, so something down there is holding up for now. Scott, thanks for the thoughts. And nice eyes on 52 is a hard place to get through. To your point, it's impossible to know the cause and effect in this thing, but when the technicals work, they work, and you get credit for highlighting it. Thank you, Scott Bauer, CEO of Prosper Trading Academy. Still looking, though, with a bullish bias for now until more things break down.
Let's bring in Scott Bauer, the CEO of Prosper Trading Academy. He's joining us to take a look at a few he has his eye on. Scott, welcome. Before we get into a couple individual companies, some stocks that are on the move, the jobless claims this number this week, I should say, today, pretty good. Would you agree?
Absolutely. And especially coming off of last week's, I guess, somewhat disappointing August number that we saw, the weeklies continue to move in the right direction. The continuing claims number, a little bit different. It wasn't bad, but it was pretty much unchanged after a revision. But yeah, the weekly number is good, moving in the right direction.
Yeah, we're seeing this one again working its way towards the lower extreme of the 300,000 level. And a good reminder there, Scott, this is closely watched here, the more frequent high-frequency data, the weekly number, especially after that disappointing monthly report last week. Let's talk a couple stocks. You've got your eye on Peloton Hire. They announced they're going to launch their own line of apparel.
Absolutely. And I have been long this thing ever since the disappointing earnings a few weeks back. So obviously for me and a lot of other people that I know, this is a nice move. I'm hoping that the stock can sustain this. I'm just not sure at this point. Coming off the heels of the blowout Lulu numbers today, maybe this was the perfect time to make this announcement. I don't know if they purposely waited for that, for Lulu to announce their earnings or not, but they're going to have a line now that they're hoping to challenge high-end fitness apparel that Lululemon sells. But I know that their line, they're going to be offering things from $15 up to $100. We'll see how quickly it takes hold. But I think they're also looking to possibly replace some of the lost revenues they've had over the past couple months from subscriber revenues. We'll have to see. I'm a little bit skeptical, to be honest, even though, again, full disclosure, I am long in this name. I'm a little bit skeptical, though, but I hope I'm wrong on that.
Okay, this is a stock that's found support around the $90 level a couple times. We're talking back in November of last year, retested it this spring in March. It broke through briefly into the lows we saw in May. We're talking down to the $80 level, but it's nice to see them find some support again here for the bulls, a key level, and again some keynote news. And again, I like that you pointed out the Lulu timing certainly tied to. How about airlines higher despite several warnings to investors that their third quarter revenue would be weaker than previously forecasted as the recent spike in COVID-19 cases is cut down on people's travel plans?
Ben, it is so difficult to understand when a company comes out with news like this, why this could be positive. And I think in this case it is, and it's really the airlines across the board, is because this was news that was expected. So the market doesn't like uncertainty. Once that uncertainty is behind us, whether the news is good, bad, or indifferent, the market reacts to it. In this case, the market is reacting favorably across the space in the airlines. Again, I'm looking to fade this move to the upside. If you look at United, American, and Southwest, all three of them, from a technical standpoint, all three are coming up and butting up right up against some serious resistance, 50-day moving averages. So I think that could be an opportunity in the short run here to maybe take a little bit of a short position. I know I haven't been filled yet. Again, full disclosure, I'm bidding for some puts in Love in Southwest. But again, I think what this all comes down to is that the news is out now, so that, expectation or that, the market nervousness about what the airlines may say, that's gone now.
All right, Southwest and the others, as you mentioned, Scott, structurally in terms of the technicals, holding in a bit of a range. Southwest below the $54 level since the end of June, holding above 48. Let's talk BYND. McDonald's is going to launch the McPlant sandwich in the UK and in Ireland, a plant-based sandwich made in partnership with Beyond Meat. What are you seeing in terms of investors' reaction to the news?
Pretty muted, actually. I mean, the stock is up slightly. On the option side, there is some pretty heavy call activity, a little bit, heavier than normal. But honestly, and I don't mean to make a really bad pun out of this. I think this is a nothing burger. I really do. I don't think this is significant, at least for right now. And if I look technically at the charts here, it's been consistently making some lower lows. I'm not saying I want to go in and short the stock here. I just don't see, at least in the near term, a significant impact to the upside.
Let's go to Scott Bauer, CEO of Prosper Trading Academy. All right, Scott, walk me through the trade and then tell me your favorite thing to do at Dave & Buster's.
All right. So I do think they're going to report really solid numbers for the last quarter. But however, as you and Jeff were just talking about, if they don't provide guidance, I think the market is not going to look at that very favorably. If they do provide guidance, I personally think it's going to be iffy at best. That's why I think this stock is bearish going into the print, and I'm buying a put spread. I'm buying the September 17th.
Oh.
Yep, I'm buying the...
Ye of little faith.
32.30 put spread for about 50 cents. Again, I think they're going to report great numbers here based on the reopening of what we saw, over the last quarter. However, just like what United came out with this morning, I think there's going to be a lot of murkiness, if you will, in projecting what is going to happen moving forward.
But United's up.
United is up, absolutely, and I think that was more the street just reacting to, all right, the news is out, almost a buy the rumor, sell the news type of event. I don't see that with play here, and the technicals with play here to me also look to the downside. But again, if I'm wrong here, Oliver, as with every trade that I make, I am always capped out on my risk here. So if I'm wrong, I'm buying this put spread. All I can lose is 50 cents.
Okay.
So that's what I'm looking at here. Now, in terms of, what's my favorite thing to do there? Man, I'm playing games you weren't even born. I'm playing Space Invaders and Pac-Man and things like that.
All right, so you got to go to the real arcade. You got to go to Emporium here in Chicago.
There you go. That's a great place, by the way. But in all seriousness, with play here again, solid fundamental, and I do think longer term here, it is a really, really good proxy for a reopening play, no pun intended, that people may overlook, because that is the kind of business that especially millennials, younger people are definitely going to start flocking to again. I just think that any sign of bad guidance or no guidance is a short-term negative.
Yeah. Okay. All right. And I think that what we saw for GameStop too means that could be a possibility. I mean, totally different company, of course, and obviously very different stock, but still one that depends to some degree on a brick and mortar, presence and no guidance. So apparently this is a quarter where CEOs view that as being optional. Whether or not it's optional for the stock, I'm with you there. I think if they don't give it, this thing's going to get hammered.
Right. And I think that the odds are more likely that they either give poor guidance or don't give it at all, rather than saying, oh, yeah, we're still on track. We believe this reopening is solid. It's still going to continue the way it has been. So that's why I'm buying this very, very cheap put spread.
Okay. All right, cheap put spread, and I was looking at the options as you were talking, and that's the thing that stood out to me too, Scott, is that it's pretty cheap. I mean, 31.50 break even, you got to get a big move. So you're not just kind of like wavering here and saying, oh, slightly bearish. You're saying, I got a view on what they're going to do. I got a specific thought that they're not going to be able to give guidance here, and I'm looking for a big drop.
Absolutely, and as Jeff alluded to, the expected move, the market maker expected move is almost $3 here. If we get that to the downside, it puts this thing in play. Again, no pun intended. So I'm really using the math here of what the market is expecting, but just on a bearish trade.
All right. Usually people say no pun intended, it was intended. That one definitely was not. Ticker PLAY.
No, it was not.
All right. Thanks, Scott. I'd crush you in Pac-Man and the other ones too. So bring it on, Mr. Bauer.
That sounds like a throwdown we got to do.
All right. Thank you, Scott, CEO of Prosper Trading Academy.
Welcome back to the second half of the Future Show here on the TD Ameritrade Network. We're now less than 60 minutes away from the cash open for stocks on Wall Street. Scott Bauer, the CEO of Prosper Trading Academy, joins us to help us get ahead of, a busy week potentially for commodities as well. Scott, welcome. No numbers at the bottom of the hour, but this week, I'd imagine the focus is going to be on the JOLTS data to begin the week tomorrow. It seems to be the kind of last page in the chapter on U.S. labor conditions and, the impact that they're having here on the economy.
Yeah, no doubt. And tomorrow's number probably is not going to be an outlier, Ben. I'm not sure that that's going to be the continuation of what we saw last week or really have any effect of some of the cutbacks that we saw yesterday, right? The stopping of federal payments. But it is a continuation. That will be a big number, I believe, going forward. I don't think tomorrow's number is going to be much of an impact, but yeah, the focus has been on jobs. It has been, especially last week, on the week number. And let me just say something right here, Ben. Last week you and I spoke, and I said that if there was an outlier number, especially to the downside on that August payroll number, I thought the market was going to sell off handily, and I was wrong. I'm surprised I was wrong, and we move forward.
Yeah, this market has been resilient, to say the least. We started off the show talking about the new all-time highs in the indices, and nothing at this point to derail them. Scott, it doesn't sound like you think the JOLTS will do that, and many were surprised this didn't. The non-farm payrolls, again, at 235,000. Scott mentioned well below expectations, 750,000 they were looking for. Now, last month's got revised up a little bit above the 1 million mark. That was a good sign, but I think it was revised up something like 100,000, so nothing major there. Scott, we were talking about some of the weak manufacturing PMI data that we've seen, the jobs and misses we just mentioned. I mean, ultimately, what does this mean for commodities? Because with rates somewhat sideways, the TNX inching up a little bit. We talked about that also at the top of the show, but for the most part, they seem to be pretty comfortable right now as the dollar's in a bit of a retreat off recent upper levels. You and I have talked about the failed attempt up around the 93.50, 93.75 level and the March highs that it got up above, but follow through is limited. So as the dollar pulls back, and I mean, in the Goldilocks scenario is very comforting for crude and copper at these levels.
Yeah, there's a lot of complacency. There's a lot of comfort, as you said, and the weakening dollar certainly helps the entire commodity space. So any of the negativity, any of the negative news that you may see, whether it's in crude and gold, whatever it is all being underpinned by the fact that the dollar has been weaker, and that's certainly helping across the whole space.
Scott, a busy week in terms of, oftentimes we lose sight of the fact that grains, we've got the WASDE report this week where the inventories push back a little bit. One thing I've been watching, I'm not sure how closely you've been keeping an eye on as we head into the summer heating season, and some of the inventories coming a little bit below expectations, still builds into this fall, but natural gas in quite a rip higher. I mean, it's starting to attract some attention, trend environment to the upside nonetheless. And whether you trade this product or not, I always say this is a great product, a textbook example oftentimes of a trend environment, as is the case, and in this case, to the upside.
No doubt about it. And a rip higher is the way to really describe it. And there's a couple things there. Obviously the tragedy with the storms that we saw, but then we've also had extended extended temperatures pretty much across the U.S. as well. Going late into summer into early fall now. We've seen higher temperatures, so that little bit of supply constraints here all kind of meshed together here, really helping with that huge rise that we saw in LNG.
Here's a look at it in terms of the daily time frame. Just want to point out, really is yet to quit. Continued most recently up to 477. Here again, the last, year's worth of daily candles. But as we zoom out a little bit, you can see again, this gets us back to levels that we haven't seen since that 492 level we saw the fall of 2018. And just want to zoom out a little bit more, because should we get above that 492 into that $5 level, Scott, we're talking levels we haven't seen since February of 2014.
Yeah.
How about gold, though? We were talking about crude, copper, comfortably in this range. Gold's kind of hovering around 1,800. It did seem to benefit mildly from the U.S. dollar getting a lift, but it's also one of these products that hasn't really been getting too excited or has seen too many significant moves tied to some of the kind of ebbs and flows in terms of the hawkish or dovish comments from Fed speakers, possibly helped by some of the transparency from Fed Chair Jerome Powell ultimately. He's been pretty clear in terms of his message, and gold seems to be a pretty good reflection of that.
No doubt about it. And that's why we've seen volatility really decrease as well in the gold space. And I think it is because of the transparency. What it comes down to now, Ben, is we know they're going to taper. And is it just, September, December, maybe March? And how much is that really going to affect the overall commodity space, especially gold? We know it's going to happen. So we've all kind of settled in. Gold is also, much like many of the other commodities that we're talking about and interest rates, kind of in that complacency mode right now. It is holding above 1,800. Again, the softer dollar is helping that as well.
It's hovering just above its 50-day moving average as well. Let's take a quick look at the daily time frame. I want everybody to see. And then lastly, Scott, I know we were supposed to be talking commodities, but when you're talking commodities, a big part of this is the U.S. dollar. You ended your thought on that note. If we could just get your sentiment here in terms of where you feel like we're headed, because we have been coming off here, and it does seem to be, building momentum into this 92 handle, briefly on the jobs report below the 92 handle.
Yeah, it did. And I think we hover right here. I'm not sure what the next catalyst is going to be to make a run back up at those 93.5, 93.70 area that we're just there, that you and I were talking about. I'm not sure what gets us there. I'm not so sure, though, when I look at everything macro going on, I just don't see the dollar weakening that much further from here. I really don't. A lot of it may depend on the decision the Fed makes when to taper, not if, but when they taper. But I think what will be interesting is later this week, we get news out of the ECB and out of Australia and Canada on their interest rate decision. So I think it's going to be interesting to see what our dollar does based on what we see the rest of the world doing this week.
It is, Scott. Central bank activity Certainly, I mentioned the WASDE report. Inventories pushed back a day, but all these products combined and some of the fundamentals behind, are there any products that we didn't cover that you have your eye on that you think we should be watching as well?
No, I really think natural gas with that big pop we saw last week is one to watch.
Okay.
I think it would be real hard pressed to break through that 490 level and into the 5 handle. But, certainly we want to watch that. Gold has been, just a proxy, I think, for the overall market, Ben, of this kind of mode of complacency here, which I think overall the market is going to start shuttering out of complacency. I think volatility is going to start to pick up. I think volatility across the board, whether you're looking at VIX, whether you're looking at, vol in the S&Ps, whatever it is, I think vol is way too low for everything going on right now, from tapering to geopolitical events. And quite frankly, I know we just finished an earnings season, but just around the corner, we're going to have third quarter or, the fourth quarter earnings season coming up here starting in early October.